noon, when the market's confused, Steve strolls in with a chart and some probable news. Troy fires up Omega like, let's model this mess, while traders at home whisper, please help me stress test. It's the show where the candles dance, volatility takes its chance. Steve says rules, Troy says math, together they chart a hilarious path. Grab your lunch, don't be late, they'll tell you why the market's weird again. Oh, great. They're calling out levels, volatility rebels, equity drama, and index devils. One guy's calm, the other's pressing buttons fast. Is this bullish? Is this bearish? Ah, depends on the past. So tune in, laugh, and maybe learn to. These two make the chaos look almost doable for you. Every Tuesday at noon, hit that stream real quick, because markets are wild, and these two are slick.
Steve, my friend, how are you?
What's happening?
Man, my wife always tells me this, but I always forget. I really need to start looking in a mirror before I just go live on YouTube.
You need to start what?
Looking in a mirror. This is like my first chance I get was when I'm on YouTube to just look at myself. And
hey, nothing wrong with a little bedhead, Troy.
I look like I'm going batshit crazy, but that's fine. Whatever you want, maybe I am, Steve. How's market treating you today?
Good. We got a new, fresh, all-time high in SPX this morning.
Oh, was it all-time high today? Did we get
6988.82 was the high tick. Getting ever so close to that elusive 7,000.
Man, do you think we get to it this week?
I would say so. If we don't rip through it during FOMC, I could see us also doing a head fake, flushing through it and then dropping too. So
that's actually, I think from a data perspective, that's actually exactly what happens. I think we usually, the first time through a major level like that, we gap up overnight into it. And then the first time above it, not 100%, but a pattern. The first time we gap above it, you can actually fade it and it gets dangerous. Once the longer it stays above it, it's a harder game to fade.
Yeah, that makes sense. That's anecdotally, that's kind of how I would play it too. I've been kind of pretty bullish kind of leading up to it, but now that it's getting close to hitting a little more reserved, I'm taking bullish positions.
Yeah, start playing it out slower. Yeah. Well, and then tomorrow is to your point, we have FOMC. Is it FOMC's tomorrow, right?
FOMC is tomorrow, 1 p.m. Central, 2 p.m. Eastern, and then 30 minutes later is the JPOW press conference, the ever interesting JPOW press conference.
It's my Super Bowl, and I get to have it multiple times a year. I'm excited about it, to hear reporters ask in 4,000 different ways, like, what's your relationship with President Trump?
Yes.
It'll be interesting to see. How do you approach these FOMCs? What are you looking at for this one? You have anything, cooking in your mind from an idea perspective?
Yeah. So, I approach them all basically the same. Let me share my screen here. Let's see, share screen. I told you I didn't need to share my screen for anything. Now, right away, I'm sharing my screen.
I love that. I love when you share a screen. We're going to add
all right. Can you see my Thinkorswim? There we go. Okay. So I'm just going to bring this down here. So we got the CME FedWatch tool. This is kind of the first thing I always look at is what is actually happening in the space. So we're currently at 3.5 to 3.75. There's a 97.2% chance that we stay there. So from that perspective, there's no, potentially no change to the interest rates. And so that would be kind of the first thing that I want to know. If I feel like there's more implied volatility pumped into the options. There's more going on if there's a potential change. But if there's no potential change, or there's a high probability of no change, then, the premiums aren't as juiced, and it's maybe not as crazy as it could be. As long as there's no surprises, that is. So just looking at that, it looks like it's going to be kind of status quo for the meeting as far as interest rates go. Of course, a lot of the movement comes from the wording in the transcript and what Jay Powell says during the press conference, as far as, forward-looking statements of what they plan to potentially do down the road. Yeah. So that's kind of step number one. But my three, I think we talked about this on a previous episode. I really have 3 FOMC trades. So any of I will do some directional trading tomorrow in the morning, maybe for the first 90 minutes, see if I can't squeeze out a winner or two on the directional stuff. But then I'm not selling any 0 DTE premium, because you can literally sit there in a 0 DTE iron condor, taking all the risk that you normally would, but the premium decay is so much less, because the options are just staying bid until that FOMC announcement. So I don't sell any 0 DTE premium. So I'll put my British iron condors on pause. I'll put my Elmos on pause. I'll put my 1 DTE iron condor on pause. Don't do any of that stuff. But my three FOMC trades are a couple things, just to kind of review. I know I've talked about this before, but number one, right before the data comes out, I sell an iron condor, like just a few minutes before. And the theory behind that, kind of the logic behind that, is you get the data release, you get a crush in premium, assuming there's no surprise. And so price kind of stays in your range of the iron condor, but you get some really nice premium decay between the time the data is released and by the time the press conference starts. I mean, if price kind of stays fairly centered on that iron condor, it's not abnormal to get 20, 30, 40% of that premium decayed within 30 minutes. There's the outliers. If it makes an explosive move, then it's going to hurt too. So you got to, obviously position size accordingly. So that's one. The other thing that I like to do is buy a long strangle. Typically I target around 30 delta. From a back testing perspective, I used to do it strictly based on a back test where I would enter about 5 minutes after the press conference starts. And the logic there is, okay, a lot of this premium has been sucked out. So the options have gotten significantly cheaper than they were 35 or so minutes ago. And so now I'm buying premium with the idea that Powell may say something that causes the market to make a decent sized move. And I'm typically targeting about 35% profit target on a 30 delta long strangle. So I've moved a little bit away from just entering that 5 minutes after the presser starts. I've gotten a little bit more discretionary, seeing how long I can wait before and see how much premium can get sucked out, and just kind of wait till watching price action to see if I can time that a little bit better. Sometimes it works, sometimes it doesn't, but that's kind of the logic behind that piece. And then the third FOMC trade that I do first thing in the morning is kind of a ratio diagonal spread, where I'm going 3-to-1 on the calls versus puts and entering that pretty close to the open. And it tends to capture some decent profits pretty quickly in the morning, most of the time. So those are kind of my 3 FOMC trades.
Yeah, no, I love it. I mean, and different approaches to it. And that's the nice thing I like about FOMC, is it gives you a lot of different opportunities. It's not just, I think when you first start, you're like, well, I'll buy puts or I'll buy calls. I think it's going to do this. But, that's the beauty of options. Once you learn the option space, there's a million different ways to play stuff, and at different times, because there's a seasonality even to the day of FOMC and the day after FOMC.
What's your go-to? What do you tend to do on FOMC day?
I've leaned towards double calendars. Shout out G Money in our community. Had some stuff. Our trades of the year showed today actually putting a double calendar on. I'll get a little directional. I'll play basically. I don't do this every time, so it's pretty discretional, but I'll play. You can usually. What's funny, this is the crazy thing about FOMC. Both your iron condor can work, and actually going along gamma and getting out for a very small profit can work. And so sometimes that initial move, everything just kind of spikes, and you can kind of like get out for like 4% profit on a straddle. Not always, something to test, but just like a little scoopy scoop. That's what I like to do on FOMC. Just little scoops,
Just little scoops here and there. I like it.
Just tap it in, as a happy Gilmore said. So,
and is your double calendar? What kind of DTE are you using on that?
I'll usually do 1-2 on a Tuesday.
Okay.
And so you're just kind of playing, the decay, but you're also playing that like vol's going to rise on that front. If something happens, that next day's vol actually can go up sometimes on FOMC, or not decay as fast as the short. So
you're entering today, and so the shorts are tomorrow.
Yep.
And the longs are the day after.
Yep.
And that makes sense, because one thing, I don't do many 1-2s anymore, but that is something that I do recall when I was doing a lot of them was there's like it's almost like, here's my theory. The premiums get juiced up in anticipation of FOMC. And then like the day of or the day before, it's like a little bit of air comes out of the balloon because they've been juiced up, overinflated a little bit too much. So that makes sense. And so do you hold that overnight, or are you in and out today?
I would love to be out before the announcement. So I would love to take it off at 1 tomorrow, 1:30. There's a bunch of different variations, in the community of people who do stuff, and I've tested all of them. I don't have a set trade, to be honest, that I just kind of mechanically do. I should, and if I had more time, I would, because I think those are actually easy days to trade if you're playing it smart like you guys do. I mean, there's just stuff you can put on that's no brainers, and you recognize that in any given trade, you're not going for broke. You're not trying to make, it's just another trade, but it's just good opportunities. They're giving you good odds at the casino. So you try to take those days when they're giving you good odds.
Right.
But what's funny about options is there's FOMC, but there's also like earnings, which is just like mini FOMC plays all the time. Have you been doing any earnings trades this earnings season, or looking forward to doing anything?
I've done a couple. I really don't like, and I try to emphasize this in my community every time I take one. I mean, the earnings trades that I do are just something to do. Like I kind of expect to make a little bit or break even. Like they are not in any way, shape, or form part of my core strategy. I have been kind of looking into some other methodologies and processes to look at the implied volatility, to either, consider going long vol or short vol, which essentially would be like buying a Rick or selling an iron condor, and doing that depending on the specific situation. But I haven't really dialed in what that would be. So right now, all I do is for earnings, and I only do it on the big ones, but I will take a directional assumption and I'll trade a broken wing butterfly in that direction. And so what I do is if I take a bullish one, for example, I'll do a broken wing call butterfly with the peak of the fly right at the upper expected move for between, if I took it today, it would be the expected move for tomorrow after earnings. Yeah. And so I position my short strikes, my peak of my fly right at the expected move, and then I position it so that there's no risk to the upside.
Would you be up for maybe looking at a model of one of those?
Yeah.
I'll
let you run the model. I'll tell you what to do. How about that?
That's my favorite thing. That's what I like to do in life, is just open websites and smarter people tell me what to do. Give me 1 second real quick. Let me get that. All right, let's see here. Can you see my screen?
Yes.
Okay, so give me an example of one.
Okay, so one that I might do, so like after the bell today, there's not really the good one. The good ones are Wednesday. After the bell Wednesday, we've got Microsoft, Meta, and Tesla.
Okay.
So let's look at Meta. So Meta has been kind of a little bit weaker than a lot, but over the last week, it's really shot up. And so, I mean, I'm just looking at a daily chart and just saying that, and a lot of times, and I'll do this based on what kind of my overall bias is in the general market, not necessarily with the specific stock, but for example, let's just look at Meta, and I would say, okay, let's do a bullish broken wing fly. So I would use the call side. If I'm going bullish, I use the call side. I'm looking at Meta's option chain and the expected move. And in Thinkorswim, they've got the market maker move, which shows a little over 45 points. And that's about the same as the options expiring on Friday. It's about a 45-point expected range. And so what I would do is my first long wing on the call side, I would go to about the 40 delta. So let's say, call it the 685. I'd buy that one. And then I would go 45 points away from the current price. So what's that going to be? 715. Go like 715, 710. Let's go with the 710 strike and sell 2 of those. And then my next long is going to be a strike or 2 less as far as the width goes. So I always just pick one, say like 730, and then model that. And then I may tweak it a bit. Yeah, that's pretty close, right? So you've got your peak on the upper expected move. So if we do get a move to the upside, a lot of times price will go right around the expected move. If it has really blowout earnings and it just blasts above the expected range, we've got no risk to the upside. We have this until Friday. And so, even if a move happens, right after earnings, we still have a couple days for it to kind of gravitate into that butterfly. And then typically what I'm looking at is I'm doing multiple contracts. Again, it's a small trade for me. I'm not risking that much, but doing multiple contracts. And so if I get out for 100% profit based on my buying power, that's when I typically start scaling out of some of the position. And then I try to let some ride until Friday to see if we can get, 200 or 300% return. So the max risk is that downside, max loss. So in this case, what is that showing?
406.
Yeah, $406. And then, so I'll start scaling out if I'm up over $400 per contract, and then try to squeeze some more out of it as we get closer and closer to that expiration Friday.
Yeah. And again, with this stuff, when you're looking at, earnings plays, like vol's going to go down. So a butterfly of this nature is actually helpful for you a little bit. So, if you think if vol's getting reduced here, let's just say, I don't remember where it's at right now. It's 90. Okay. Let's just say it gets reduced by half, this expiration. It's not going to take much move if what the expected is going to get there, right? Like you get 100% pretty fast if that move goes up.
Yeah, and that's pretty normal. If price is kind of anywhere close to that butterfly body, inside, if it's anywhere kind of inside the long strikes, you're typically going to be pretty close to, if not significantly over, that 100% return on capital.
Yeah, no, that makes total sense. I love those type of trades. I like that you're just picking a direction. I mean, one of my big problems that I know emotionally as a trader is I know Greeks, and so I will constantly try to get delta neutral, and it's like destroying my own trade. where it's like, I like that you're just like, I'm going long on this trade. Now, will you ever do this on the put side? Would you ever do a butterfly to the
Yeah,
put?
yeah, for sure. I'm usually going on the bullish side, but yeah, in fact, I took a couple already this earnings season. What were they? One was Netflix, and the other was, I don't remember. But anyway, I went bullish on both of those, and price went down, so I lost on both of those.
Sure. Let's
But yeah, if I have a bearish bias on a stock, or I want to take a bearish position, I just do the exact same thing on the put side. Do you want to model that?
Yeah, let's show it real quick because it's interesting. I think people are really interested in earnings plays and how to play them. So, what would be if you had to pick one, like just to pretend you're bearish on it?
Well, we can do it on Meta, or let's go with Tesla. Tesla's had a little bit of weakness here lately, the last couple of days anyway.
Yep.
Okay, so Tesla, we've got an expected move of about 25. So go to the put side and start with the first long. I would use about the 40 delta, so call it the 427.5. I would buy that one. 25 points, so about what is that? 410 would be my shorts.
Oh, 410. Okay.
And then, yeah, do 2 of those. And then what's the width there? We've got
17.
Yeah, so go to the call it the 400 strike and buy that one.
Yep.
You could probably go to the 397.5 too. Yeah, move that to the 397.5 instead of 400. Okay, so yeah, pretty similar. You see, you've got no risk to the downside. Your profit peak is right there on the downside expected move. So if Tesla does have a negative reaction to earnings, that's a good spot that price could go down to. If it has a horrendous earnings and just continues to drop, you have no risk. You'll make a little bit of money on the downside. And so your max loss is 347. Go over to what's that minimum profit all the way to the downside?
Oh,
So
sorry. Yeah.
If you hover all the way over to the left,
153.
So that's still almost a 50%, 45% return on capital, even if it blows all the way to the downside compared to what the amount of capital you used.
Yeah. Now, one thing that's interesting of this to the put side, you would think, okay, well, that's not going to work. It's the same kind of thing as that, if it's going against you and vol's reducing, then you're going to lose. But if you're going in the direction of vol's winning, that actually increases your win. That's how the structure of the Greeks works with these type of plays. And so, yeah, it's a smart play. Someone's asking, Steve, when do you put something like on this on the earnings calendar time?
We always do it during power hour. We stream live for the last hour of the day, and so I always do them during power hour. So I want to kind of see where price is trading right near the end of the day before earnings. So for Microsoft, Meta, Tesla, which report Wednesday after the close, I would do those within the last 30 minutes before Wednesday's close. I think we lost your volume, Troy.
Oh, sorry. If it's an afternoon expiration, 4:15, 4:30, you're putting it on basically right before close that day. If it's a morning expiration, would you put it on just the afternoon, same time?
Same thing. Yep.
Yeah, so
this
is kind of the last second thing. You don't want to sit there with this. Just put it on and just let it play out.
Yeah, and you could certainly put it on earlier. You just don't really know where price is going to be right before earnings. So I just like to kind of be closer to the end of the day, so you kind of know where price is right before the earnings announcement. But there's nothing wrong with putting it on early if you're not going to be in front of your screen in the last 30 minutes of the day either.
That's super helpful. I mean, yeah, earnings season, it's always fun to look at those, and I think it's helpful for people. So I appreciate you looking at that. But in the closing minutes, Steve, you don't just do earnings plays. You do some directional stuff. And I believe you're having a webinar to talk through that. And I know if you've listened to people before, you're like, a webinar. Don't think like hotel room like knife set webinar. This is a this is
Cutco.
actually
I still have
yeah,
a,
that's
I
right.
still have a set of Cutco knives.
Dear to my heart. But this is a these things are fun, and you do a great job of presenting things. I've said this before. I used to wait at work when I was just a lowly software developer for these afternoon webinars that would come out from Steve, and so I'm they're near and dear to my heart. But Steve, you've got a webinar coming up, I believe Thursday. Is that right?
Yeah, and sometimes we do these webinars, web classes for people who are not current members, just to give like high level overviews of strategies and things like that. Sometimes we do web classes just for our own members. This one's kind of a combination of those. Like we're inviting our current members as well as non-members, and the reason is because we have a full course on exactly how I directionally day trade. But these are a couple new strategies that are not part of the course that I have already in the membership. And so the idea here is I'm going to be redoing a lot of the lessons for the directional day trading course. And so this is just kind of an intro to those strategies. Um, a lot of it uses a lot of the same principles that I've always used to day trade to directionally day trade, but these are just some specific ones. Primarily, how I use trend lines to directionally trade, and that's more of a continuation strategy. And then also how I trade reversals. So those are just kind of the two main concepts that we'll be talking about that are not part of the directional day trading class that I have for pro members. But it's going to be something that I dive into in a lot more detail and nuance coming up to re-record those. But this is kind of a introduction to that. And we, like you said, this is not a Cutco sales presentation. We will have we will have a discounted deal if somebody does want to join. We always do that around these classes, but this it's really going to be diving in and teaching the strategy. So it's not some kind of just sales webinar by any means.
Yeah, no, he'll actually give you the strategy, which I've always appreciated about that. So, Steve, listen, you're the man. FOMC is going to be fun tomorrow. Do you wear anything special during FOMC, or is it just the same outfit?
I usually just trade naked.
As you should. And by that, we mean,
not naked options, no clothes.
Yeah, exactly. Well, yeah, exactly. That's the safer thing to do, to be honest. So, on that note, we'll let you go. We'll be back next week. Hope you guys have a great trading day.